They expect you to stay quiet, to swallow hidden fees, put up with faulty products, and accept poor service as just the way it is. But you can demand better. Stand up, speak up, because with Which on your side, you can say no to bad business, buy with confidence, and get the service you deserve. Which, the power in you. Find out more at which.co.uk.
When searching for a new mortgage, it is easy to focus on the headline rate, but should you be paying more attention to the mortgage fee? Welcome to this podcast from Which. Hello, it's James Rowe at home again this week, but two very well-informed guests are joining us as well, you'll be pleased to hear. First up, our mortgages and property man, Sam Wilson. Sam, how are you?
I'm good, thank you. How are you, James?
Yeah, very good, thanks. Nice to have you back on the podcast. And alongside Sam is from L&C Mortgages, David Hollingworth. David, how are you?
Hi, James. I'm really good, thanks. Thanks for having me.
No bother. Nice to have you back as well. Sam, you've been doing some analysis into mortgage fees for the Which website, and we will get into that analysis shortly. But when we're talking about mortgage fees, what are we actually talking about? Let's just get some surface level here. What are the mortgage fees that you would pay?
Mortgage fees can come in at a few different points during your mortgage. So the initial fees, these are often called arrangement, booking, completion or reservation. These will be fees that will be charged by your lender at the start of a mortgage. You can also have early repayment charges. These again are charged by your lender, and they will come if you look to end your mortgage term or pay off your mortgage before the end of your fixed rate deal. There are also other fees that you need to think about. Some brokers will charge fees for finding a mortgage for you, and there are also fees that might come from solicitors as well.
It's probably a good point to bring you in here, David, because Sam mentioned that there's, the list almost seemed endless about all the different types of fees are, and the broker fee was mentioned as well there. How do they all differ? Where is that money going to? Like the lender, the broker, and how is that all made up?
Yeah, so the majority will be part of the product. So the arrangement fee is very much an intrinsic part of the mortgage deal itself. Early repayment charges will be a contractual term. So that's all going to be encapsulated in the detail of the product that you're going for. There may also be setup costs like valuation fees potentially. And as Sam said, legal fees may be required. So if you're putting a remortgage in place, there are some basic legal fees. So those may be payable or they may not be. Other fees might come along the way. So as you mentioned, some brokers charge a fee. Others like us don't charge a fee and work just off the fee that we receive from the lender, which all brokers will get. So that's another one to look out for. And then you've got admin fees as well. So as you're running through the mortgage life, if you're making changes along the way, there could potentially be some administration fees along there. Or if you're leaving your lender, for example, there might be some small costs that come along there, but those are typically much smaller, and it's the arrangement fees that are going to be the one that are really going to colour your judgment around what deal looks right for you. I
took a mortgage out last year for the first time when we bought our first house together, and me and my partner, by the way, not me and David, just for full clarity there, it sounded like I was talking about me and David. And I was thinking about my mortgage fees, and I don't remember what my mortgage fee was, how much I paid, and I don't know whether that's just because time has passed, or maybe I didn't pay one. But David, do you think is it fairly reasonable for most people not to be aware of what fee they're actually paying, just because it's such a big process? They're kind of just paying the bills to get through the mortgage process.
Certainly something that you need to be aware of at the time. I suspect you've gone into after the fact, you've kind of forgotten it all, having pored over every single deal that you were looking at and looking at the fees and wondering which might make up the right deal. Because there's actually a kind of bewildering choice, and lenders will have massive range of choice, which is great for us as a broker and for our customers. But it's very, it's very easy to get drawn into that quagmire of what fee will I be paying, and probably after the fact, you're just glad it's all over.
Yeah, I do think it is an after the fact thing. I remember at the time, just sort of, working with the broker and just looking at the different deals that were available and all the different prices that were available. I remember it being a bit of a headache. So yeah, hopefully it is a case that I've just sort of tried to wipe my memory of it for 5 years until I have to remortgage. I hope that is definitely the case. Sam, getting into your analysis then, tell us, what have you been looking into? What's the story?
There's really two key questions that we wanted to answer. What is a typical fee for you to pay for a mortgage, and are they going up? So how do we do this? A lot of spreadsheets, in short, but what we did is we looked at the top 5 mortgage deals for a range of loan to values, because different loan to values will have different prices. And by prices, we mean rates, for the most popular products on the market, which are 2 and 5 year fixed rates. And we split this into different borrower types. So we split this into if you're moving home, if you're a first time buyer, and if you're remortgaging. Again, we did that because the best rates differ depending on the type of borrower you are, because there's a different risk to the lender, whether you're remortgaging or whether you're buying your first home. So what did we find? Typically, if you are a home mover or you are a first time buyer, you want to secure a top rate, you're looking at a mortgage fee of about £999. When we say mortgage fee, we're talking about the arrangement fee. So it's that initial cost. Now, for remortgaging, we found that it was actually quite a bit higher. The most common mortgage fee for a top deal for remortgaging was £1,999. So you can see there's quite a big difference there. But when we're looking at averages, we typically found that for remortgaging, it was you were more likely to have a more expensive initial fee for 2 year rather than for 5 year. And we can come back to kind of why that is. Whereas for home movers and for first time buyers, the difference between 2 and 5 year was pretty negligible. We found that the average mortgage fee for a top deal for those borrowers was always roughly around £1,000.
David, just hearing those numbers there, so 900. Oh, sorry, Sam. Have you got even more numbers for us?
I noticed that I hadn't talked about whether they've gone up or not.
Yeah, you haven't. But hold that thought, and we'll come back to it. I'll go to David first, because Sam mentioned those two figures of £999 and then, basically £1,000 jump. Is there a specific reason why there might be such a stark difference between those two figures?
What you tend to see, we're in a really competitive market, and I think what lenders are looking to do is try and differentiate themselves in any way they possibly can. And one of those is to drive rate down. So obviously people will look at what the headline rate on a deal is, and they will be looking to try and get the lowest rate they can. That's perhaps people's original starting point. If a lender is going to apply a bigger fee, that may allow them to just drive that rate further down. So that might bring them into the mix. That doesn't mean it's the right deal for that borrower. But what you see is that you do get stepping in arrangement fees. So you might have a low fee, then 1,000, 1,500, but you can be getting up to that £2,000 mark. Those might be targeting larger loans. They might just be there to just try and draw in more borrowers. So yeah, you can see that, and I think it's particularly prevalent when the market's so competitive. Lenders are struggling to push prices down, and therefore pushing the fee up may help them do that.
Sam, go on then. You can tell us whether or not these fees have been going up and down. You've been comparing it from now, I guess, to 12 months ago?
Yeah, so we looked at 4 weeks of data in January 2026, and then 4 weeks of data in January 2025. And what we found is for first-time buyers and home movers, for the average typical fee that you'd find for a 2-year fix and a 5-year fix, there wasn't too much change. It wasn't really dramatic. So for first-time buyers, we saw an increase of £13 and £19, which really, that's not a lot. However, for remortgaging, we saw a really big jump for 2-year fix. The typical fee that you would pay for a 2-year fix now compared to 12 months ago has gone up by £475. For 5 year, it has also gone up by £127, but it's obviously nowhere near that 475 figure. There might be a reason behind this, being that 12 months ago, 5 year fixes were cheaper. They had lower rates. In the 12 months since, 5 years are actually the more expensive option. 2 years are now the cheaper option. And like David said, the lenders have been driving down the rates, trying to be as competitive as possible. And what we might have seen is in trying to be as competitive as possible and seeing the 2 years being the cheaper, more popular deal now, they've whacked the prices up on them, or the fees.
And David, I don't want you to necessarily just repeat exactly what Sam said or what you just said 2 minutes ago, but, you know, does that kind of just align to the competitiveness of the market?
Yeah, I think so. And I think 2 year has definitely become a growing part of that market. So in a number of years, unusually, 5 years have been cheaper. And we saw a lot of popularity for 5 year because of that. But more recently, we've seen that slip back into what might be called the norm. And 2 year rates are now undercutting 5 year. And along with that, we've seen more people looking for that kind of short term fix. They're hoping that interest rates will come down, and therefore locking in for a shorter period might give them an opportunity to review again in a couple of years and get onto something cheaper. And of course, those who fixed in the aftermath of the mini budget will be coming off shorter term deals, so they'll be pleased they took that decision. So yeah, I think there's a lot of focus on the 2 year, and fees play a much bigger part when you're looking at shorter term deals as well.
Sam, just going back to those numbers again, you know, if we're looking at sort of a rough number, we'll just say £1,000 for a fee. It is a huge upfront cost, and I guess for for people who are remortgaging, I guess they've almost baked this into their process because they've had a mortgage before. They'll be aware that they've paid a fee before, so they kind of know to expect it. But for first-time buyers, I guess it might be a little bit different because you're going into this totally blind, aren't you? So is there any benefit of not paying the fee up front and adding it to your mortgage? Is that something worth considering? Have you got any numbers on that?
Yeah, so I think a lot of this comes down to your situation and kind of what you value. If you've bought your first home, or if you're moving home, there's so many different costs. As you were saying, there's so many different costs to think about. There's so many different things to think about that actually you might decide that adding the fee to your loan and just either you don't have that kind of £1,000 to pay up front, or you'd like to spend it on something else. You need a new appliance that you've moved in, or you just like a little bit of savings. Just as we all know, you know, the economy isn't great, so it's nice to just have a little bit of a safety net. But we did run some numbers just to kind of give a representation of in pounds and pence what it can look like if you add a fee to your mortgage. So if you're a first-time buyer and you borrow £300,000 at 4% over 25 years on a 5-year fix, you'd have a monthly repayment of £1,584. If you are then going to add the typical £999 fee onto your loan, your monthly payments go up by about £5, a little bit more than £5 per month. Now, over the course of that 5-year fixed term, it's going to cost you £316 more than the monthly repayments if you just paid it up front. So it's not a really significant addition, but obviously you are borrowing more and the interest rate will be applied to the fee. So it is going to cost you more in the long run. But for some people, it actually might just be more valuable to have that money in the bank or spend it on something else where you can't borrow.
David, do you agree with that? I guess this is kind of like the conversations you would have with a broker, isn't it? About deciding what you would want to do with that fee, whether you'd want to bake it into that mortgage or if you'd want to, get it paid up front. It all depends on personal circumstances, I guess, doesn't it?
Yeah, I think a lot of the time would be a case of can people pay it up front as well as do they want to? Most lenders will charge these fees on completion of the mortgage, which is a positive thing because it means that you're not having to pay a fee up front, which if something goes awry further down the line may or may not be refundable at that point. And that's particularly pertinent when rates have been coming down. And what we've seen is borrowers going from the rate that they originally locked in, being able to actually improve on that rate and maybe want to actually rethink the deal that they end up completing on. So having not to pay fees constantly up front is a positive. But I think if you can afford to pay it, then that avoids you adding it to the loan. You will have other fees along the way potentially. So if you're doing this every 2 or 5 years, then the amounts that you're adding to the mortgage start to stack up. And of course, you're paying interest on it all the way. So it's not just for 2 years, it's for potentially the 25, 30, 35 years that you've got the mortgage.
Shall we chat about fee-free deals? Easy for me to say. Because surely it just on the surface of it, it looks like a no-brainer to try and seek something out like that. I don't know what you've seen in some of your research and analysis, Sam, but I think it's fair to say that it does look very appealing not to have £999 fee on top of the mortgage, doesn't it?
Yeah, definitely. Whether you're buying your first home or you're moving home, there are so many different fees that you have to pay. If you can scrap one of those, it's quite nice. So again, we split it into borrower types and we looked at the best rates just overall and then the best rates with no fee. And we typically found that for home movers and for first time buyers, you would pay a premium of about 0.1 of a percentage point, whereas for remortgaging, that premium's about 0.2 percentage points. Now, we can get a little bit bogged down in the exact interest rate. So it's quite helpful to add an example with pounds and pence. So if you are a first time buyer and you're borrowing £250,000 over 25 years and you have a fee-free deal that's 4.1%, you're going to be paying £1,333 per month. Now, if you had a deal that has the typical fee, so £999, and the rate was 0.1 percentage points lower, so 4%, you'd actually pay £13 less per month. So your monthly repayments would be £1,320. So again, it is this dance that everyone has to do of, do we want to be paying less per month? Would we like to have more money in the bank? And like David says, there might actually not be the money in the bank, so we might not have as much choice. It's just really helpful to set out these scenarios for buyers and for if you're remortgaging with the best deals overall, the best fee-free deals, and just try and work out what that means for your monthly repayment, because ultimately that's the thing that you're really going to notice, the money that comes out of your bank account every single month.
And it is a delicate dance, I think was the phrase he used, which is fantastic. About which product you actually go for, because the lowest rate isn't necessarily going to be the best deal for everybody. But David, do you think that more people or most people are kind of just looking at that headline rate because that is, I guess that's kind of what they can sort of contextualize it with more? Or too many people just looking at the headline rate and just sort of going full steam ahead with it?
Very easy to do exactly that. Look at the headline rate, look at the lowest monthly payment. But what you can do, that can distract you from the other costs that you might incur. So what I always say is you're really looking for the value from the deal over the deal period. You know, what's the best overall value? And that's going to depend on your individual circumstances. Fees are not necessarily a bad thing. I think Sam's example kind of shows, you know, that trade-off is what you're trying to deal with. Do I want a lower rate and a lower payment? Does that actually save me back the fee that I might have to incur to get that rate? And that's the kind of stuff that we as a broker are doing for customers all the time, trying to pinpoint what's the best balance here. Should you be going fee-free? And certainly they're a really valuable product. If you've got a smaller mortgage, paying out a whopping fee is probably going to far outweigh the saving that you're going to get in the rate. If you've got a huge mortgage, on the other hand, then of course that saving that you can get on a lower rate may actually cover the fee quite comfortably over the course of the deal period. So there isn't any one single answer, but those are good sort of benchmarks to work to and look at what's that value, like I say.
And at this point, Sam, is it worth touching on APRC here? Do you want to just sort of explain what that is and kind of why you might want to sort of factor this into any decision making as well?
Yeah, so APRC, or the annual percentage rate of change, is what was brought in to try and make it easier for borrowers to try and understand what, as David is talking about, the value of the loan is. So what it takes into account is it takes into account the mortgage fees, the fees charged by your lender, broker costs, legal charges, which is great to kind of bring something all together, all of the different fees that you might have to pay. The problem with it, though, is that it assumes that you will be on that deal for the entire length of your mortgage. So if you're a first-time buyer and you're just starting out, if you go for a 5-year fix, it's then going to assume that you're going to go onto the standard variable rate for 20 years, which is going to be much, much higher. And it's really something that nobody would recommend that you do. You can get much better rates by fixing or by choosing a different variable rate. However, there will be scenarios where it will work for people. If you're right near the end of your mortgage and you do only have 5 or 2 years left and you're going to fix for that period, or you're going to stay on the same variable mortgage rate for that period, then that will be a really helpful rate for you to be able to compare different deals and get a real sense of what the total cost of each of the deals are, rather than just looking at the rate. And it will also save you having to do a lot of different sums.
I suppose all this, isn't it, is just about trying to find the right choice for your personal circumstances. And David, for a lot of people now, and I guess this has sort of been the case for the last 6 months or year or so, for people who are coming off a 5-year fix now, who took out a deal when the base rate was at about 0.1% or whatever it was at its lowest during COVID. And we now have the Bank of England base rate at, what is it now, about 3.75%, I think it is. So those rates are going to be shooting up. So I guess there's a lot of people who are coming off a 5-year fix who are almost going to be having like this reality check, this scare of kind of how much their mortgage repayments might go up by. So at this time of year, for those people, it's going to be a really tricky choice, isn't it?
It is, and I think, it makes it all the more important that they're shopping around and looking at all these factors that go into choosing the right deal for them. Because if you have been on a really low 5-year fixed rate, then obviously you've avoided all the turbulence that's been going on over the last 5 years, but you are facing into higher payments, even though mortgage rates have been easing back and looking a lot better. They're currently at the lowest since they were in 2022. But nonetheless, people will be seeing payments rising. So being aware of these fee factors as part of that deal selection is really important, and it will help you navigate the thousands of deals. And that's great, by the way. The choice out there is unbelievable. So you should be able to tailor the product to the right kind of spec for your individual circumstances. But it can just be a bit mind-boggling when you're looking at thousands and thousands of different deals.
Mind-boggling is definitely the most appropriate word there, for sure. Before we wrap up, Sam, anything else from your research, analysis, your numbers that you want to bring up, or are you all numbered out? Are you done for the day?
I think I've probably said enough numbers for this episode, and probably for a few weeks, actually. I think I'll be sticking solidly to words for a little while now. But I think, just to reiterate what David's saying, it's just really important that people really understand the fees. Don't stick your head in the sand, and make sure that the fees, the rates, it's all explained to you, or you work it out using a few different sums in pounds and pence, because that's what you'll see, and it might just make it a little bit easier to cut through what the actual price of the different deals are.
Yes, and if you are listening and you want to read Sam's research in full, then it's on the Which website. We'll pop a link in the show notes as well. We can put a link as well to the our mortgage repayment calculator as well, if you've got a couple of deals and you want to sort of compare them as well. But for now, Sam, thanks very much. Thanks for all of your numbers and analysis. Always good to hear them.
Thank you so much for having me.
David, thanks very much as well.
Thanks both. Enjoyed it.
That brings to an end another podcast from Which. There's loads more for you to read about everything we discussed today. Just head to the episode description for more useful everyday advice. There you'll also find an exclusive offer for podcast listeners like you to become a Which member for 50% off the usual price, giving you access to our product reviews, our app, one-to-one personalised buying advice and every issue of Which magazine across the year. Plus, your membership helps us to make life simpler, fairer and safer for everyone. If you'd like to know when we release a new episode, then make sure you press subscribe wherever you're listening. That way you can be one of the first to listen. And for any questions, comments or anything in between, follow us on social media at WhitchUK or email us podcast@which.co.uk. Goodbye.
Looking to book a getaway in 2026? Why not try Which Travel Brand of the Year Trailfinders? Right now, Which members can save £100 on any 7-night or more holiday that includes flights. Just head to which.co.uk/trailfinders to find out more. Not a Which member? Get 50% off a membership right now. Go to which.co.uk/podcast offer to get involved. T's and C's apply.